But for me personally, silver is my barterable position. So I don't really do collectible silver. I'm just looking for a variety of sizes. And in this case, I don't care if it's new. I don't care if it's old. I only really kind of care about the weight. And beyond that, it could be in any form. Absolutely any form. Silver and gold at its base is monetary. So it's important to understand that. But can you see how far away we still are from that 200-day moving average? So if it corrects back down to that, if it even goes below it, I'm okay. Because look at the direction of the 50-day as well as the 200-day moving average. They're in an upward trajectory, right? So remember, there's only so far above or below that it can go before it comes back to that average.
The precious metals market is seeing a significant development, and this is not just a passing fad. For the first time in decades, both gold and silver have seen backwardation, which means that the spot price is currently higher than the futures price. That simply means that there is a shortage of physical metal. The LBMA and COMEX, the paper markets that have set prices for years, are now finding it difficult to satisfy actual demand. Silver is very close to $50 and gold is about $4,000 per ounce, but beneath those figures is a more serious crisis of faith. Lynette Zang claims that this is precisely the kind of moment she has been warning about, the tipping point at which the paper system starts to crumble and real assets reveal the truth. According to her, the market is about to reach the final melt-up phase, which precedes a complete monetary reset. Delivery delays, central banks hoarding gold, and investors worldwide racing to obtain actual metal before it's too late are all indicators. Lynette believes that this is the start of a new financial reality rather than the conclusion of a rally. Be sure to like, subscribe, and hit the notification bell for more insights into gold, silver, and precious metals investing.
Anyway, so this is really what's happening with spot silver. Additionally, remember, did the piece on backwardation come out yet, or is that coming out Saturday? All right. Make sure that you watch the piece on backwardation. Now, backwardation, this is true for both gold and silver, but is when the current spot price is higher than the futures price. So buying silver out in the future, because what's been happening with extreme demand is that people don't trust those future promises, and you shouldn't. We've had some entities, some large entities that usually, contracts for silver are like 5,000 ounces. They have different size contracts and they're making them smaller and smaller so you guys can participate. That's just a contract. It doesn't mean anything. And a lot of what's happening, and I think I saw it this morning, so I stuck a slide in there, so I'm probably going to be a little redundant on this. But in the ETFs, so SLV, GLD, have seen the largest outflow in a long time. So they saw this massive inflow pushing the price up. Now they take it out. That pushes the visible price down. But what's changed? What changed from a week ago? Absolutely nothing, other than those that would have to deliver out the silver are scared because they know that the emperor has no clothes. They know that when push comes to shove, if they are forced to deliver out silver or gold that they cannot do because in the physical world there's a finite amount, then you're going to know that the emperor has no clothes. And they don't want you to know that because they want to keep this game going and stay in power. And so you'll see something kind of similar with gold, but remember that spot silver had a much more stretched run. So as you can see, when you're looking at this chart, it is still, the spot silver market is still 22% away from that 200-day moving average. So if 10% away is considered a lot, then 22% would be extreme. It doesn't mean that it can't go back to extreme levels, right? Because we're seeing the same thing in all of the markets. Why? Maybe we're in the melt-up phase that I've been talking about, which is the last phase before the crash. I will do a piece on that so you can see it and what it looked like in different countries. That's coming up, and I will be working on it. That's going to take me a minute second question down the list is, could you please also talk about the crash in silver? So today I'm going to talk about both of what's happening, because we aren't talking about, and we're going to talk about this too. I'm going to show you this too. We're not talking about the physical markets. We are talking about the spot markets. But of course, you have been trained to think that that's representative of gold and silver, when in reality, it is simply a trading product that is designed for perception management. That means that they want to make sure that you don't own physical metals, because after all, they need your wealth in the system, because then it's much easier to inflate away. This stuff, physical in your possession, runs zero counterparty risk and also runs zero inflation risk. They cannot inflate this away, and it's not because I or anybody else says so. That's because they are both used in every single sector of the global economy. So that means that you have full functionality and full demand. So let's just go to the charts, and I'm going to start with a long-term chart, because while we've talked about this in the past, I want to make sure that you understand it. And there is this blue line that runs underneath all of these choppy lines, and that would be the 200-day moving average. So what that means is every day for 200 days, they total up where spot silver or spot gold or this is true for anything on Wall Street. Wherever the price closed, they total it up for 200 days, they divide it by 200, and it gives you an average. And that 200-day moving average, I've told you this before, but it acts like a rudder on a ship, so that there's only so far above or below that average that it can go before it always comes back to that average. So here are just some examples on this long-term chart. This is a silver. Happens to be a silver chart. Okay. Now you can see where all of these go. Whoops, let me back up. I did that way too fast. So you can see where these boxes are, and if you can see that blue line, there's only so far above or below that it goes before it comes back to that line, back and forth. Now, 10% away from that line is already considered a lot.
Lynette Zang isn't hiding the fact that she is raising the alarm. According to her, the present decline in both gold and silver is an obvious indication that the paper-based financial system is collapsing. Investors no longer believe assurances of future delivery when the spot price exceeds the futures price. Instead, they demand real metal immediately. Zang draws attention to a pattern that most mainstream analysts overlook: significant withdrawals from popular ETFs like SLV and GLD. Although they are officially referred to as portfolio rebalances, she thinks institutions are covertly exchanging shares for actual metal before prices spike. Ironically, these redemptions frequently result in lower paper prices, giving the impression that demand is declining when, in reality, the metal is just permanently exiting the system. Technically speaking, Zang notes that silver is still nearly 22% above its 200-day moving average, a level that frequently denotes the last stretch prior to either a minor pullback or a full market repricing. This is the ecstatic last stage before the system fails, which she refers to as the melt-up zone. Now, let's get back and hear her following words.
But can you see what I'm talking about? And with the correction, in other words, the spot price of silver coming back down, well, there's always, I've talked about support and resistance, right? So here's how that works, right? Let's say support, and you were going to buy something, like you were going to buy spot silver when it was $36 an ounce, and you didn't do it. And then it shot all the way up past 50. Well, you're going, man, if it ever gets that low again, I'm going to buy it, right? So that creates a pool of buyers at that level. And so spot goes down, dips into that pool. There are more buyers. It pushes the price up. Spot goes down, dips into that pool. It needs to use up that pool of buyers before it can go to the downside. And the reverse is true on the top, and that's called resistance. So let's say you were going to sell it at over 50. And remember, 50 was the very long-term peak in that triple cup formation on the long-term spot silver chart. I've shown you that a gazillion times. I'll show it to you another gazillion. But that creates a pool of sellers up at that higher level. So spot goes in, dips into that pool of sellers, that pushes the price down, which is what we're seeing. That's one of the things that we're seeing right now. It goes up, it dips into that pool. When it uses up that pool of sellers, that's when it can break free and go to the other side. So we could potentially be testing that silver contract at that support level, and we'll get into it. I'm going to go to a closer chart right now. This is a 1-year chart, and you can see in this case that red line. Let's see, this is spot silver. Okay, you can see that red line is the 200-day moving average. That blue line is the 50-day moving average. When the spot price is above that 200-day moving average and the 50-day moving average, that is very, very bullish. But can you see how far stretched the spot market was from that 200-day moving average? And even going back through last night, because these graphs are from yesterday, right? I wanted to be as current as possible to show you this. It's still 22% above that 200-day moving average. So I frankly, knowing that this is a trading instrument and that it does not represent the true fundamental value of an ounce of silver, which is somewhere around $2,000, this is an opportunity to get in. Because with silver, for me personally, and you have to do whatever you're comfortable with, so I can just speak for myself. But for me personally, silver is my barterable position. So I don't really do collectible silver. I'm just looking for a variety of sizes. And in this case, I don't care if it's new. I don't care if it's old. I only really kind of care about the weight. And beyond that, it can be in any form, absolutely any form. Silver and gold at its base is monetary. So it's important to understand that. But can you see how far away we still are from that 200-day moving average? So if it corrects back down to that, if it even goes below it, I'm okay. Because look at the direction of the 50-day as well as the 200-day moving average. They're in an upward trajectory, right? So remember, there's only so far above or below that it can go before it comes back to that average. So understanding the direction of that average is also really important to take note of.
In order to demonstrate how the price of silver travels via patterns of support and resistance, Lynette Zang guided her audience through a long-term silver chart. She highlighted the market's behavior around the 50-day and 200-day moving averages, which are important markers of both short-term and long-term price patterns. She clarified that when the spot price of silver is significantly higher than the 200-day moving average, it frequently indicates that the market is overstretched and may return to that average. Zang stressed, though, that this does not imply the end of the bull market. She really views these declines as positive opportunities to buy additional silver at reduced costs. She likened market psychology to buyer and seller pools to make it simple to comprehend. Many take action, creating support when the price of silver drops to a point where buyers were previously unable to purchase. Prices rise again as a result of this buying pressure. On the other hand, silver encounters resistance when it reaches a point where buyers desire to sell, which may cause the price to momentarily decline. Zang emphasized that the silver price is currently nearly 22% above its 200-day moving average, demonstrating the continued strength of the upward trend. She sees this instability as an opportunity rather than something to be afraid of. For her, silver is about preparation rather than conjecture. She refers to it as her barterable position, something physical and genuine that she can depend on in the event that the financial system is reset. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your